Market Day Report, and it's Report Day. World Ag Supply Demand Estimate, or WASDE report, that's what we commonly refer to it as, is set to come out in less than 2 hours. So we'll be watching for that coming up in, well, at 11 o'clock Central Time. How about we jump into the markets, and how are we trading the corn market right now? Let's go to Chicago, and it's up 3/4 of a penny on the December at 434 3/4. March contract 442 is a tick higher here this morning. As we get the trade rolling, soybeans are higher. January 997 3/4, up 7 3/4 cents, and that March contract above a 10 handle now at 10.03. As it climbs 7.5 cents higher, we're within a penny of the day's high on that contract. How about soy meal and oil? Well, repeating what we did yesterday, meal moving higher, and oil has been under pressure both yesterday and in the overnight session. Now to the wheat market, let's focus on July contracts. Chicago up 3 at 576 1/4. And again, this will be the new crop July hard red at 577 3/4, up 3 3/4 cents. So that's the crop that's in the ground right now, whereas the December through May contracts are what we have in the bin. Spring wheat, Minneapolis in the front month for March at 6.05. It's up 1 3/4 cents. And the cotton market, March contract down 12.6983. Chris Swift is with Swift Trading. And Chris, we start the morning again, a big report from USDA. And I say a big report, we're really not expecting anything big or surprising.
No, there probably won't be too many changes, and we know that a lot of cash activity has already taken place for the year. It would be highly unlikely, unless there's some kind of dire need to sell more cash here at the end of December. You're going to put it off till next year and be on next year's taxes, whatever, just to get rid of it then. But what we've noticed is corn continues to consolidate. It's in a triangle. It's closer to the top end of the range than it is the bottom end of the range right now. and we see wheat lower, we see beans lower, and yet corn continues to triangulate. So I have to believe that of the three, corn's a little bit stronger than the other two. And I know we've got a bigger crop in South America for the beans. We've probably got excellent growing conditions right now on the wheat because everybody wants cattle to put on the wheat right now. So that leads you to believe that the wheat crop is actually in really good shape right now.
Okay, so we can really, as I talk to analysts, we have those who really focus on the technical side of things, what's happening with the charts, if you will, others on the fundamental side. But one thing I keep seeing in the corn market from analysts, bullish fundamentals. And you agree?
They're underlying. They're there. It's going to take either some kind of supply cut in somewhere or another. Maybe we see that from South America. Maybe we plant a few less acres here in the U.S. for this year's corn, or for the 25 corn crop. But again, it triangulated, and so that's kind of interesting. The triangulation began after the market had been going lower, so you would think that if it breaks out to the downside, but yet we've tried several times and have not been able to do it. And we keep looking at oil, and we know that corn is a part of the energy market through the fuel part of it there. So with it, we have to believe that with oil still kind of being supportive, it kind of has an undertone for corn as well.
All right, and as we look at the crude oil market this morning, we are moving higher on that January contract, as February also moving higher, 68.13, and it's up 4 cents. All right, so we'll use that as a segue to a break, and when we come back in a moment, we'll look at livestock futures with Chris Swift. Market Day Report continues in a moment. All right, so we're waiting to see what happens with cash cattle this week. Will we be higher or lower? Again, last week's trade for cash cattle higher than the previous week, both in the south, the north, and on a dressed basis. We can tell you this morning that the 5 area average price, and this is for live steers, at $190.90. Okay, how does that play into the markets? Let's go to live cattle now in Chicago. December contract up 40 at $188.20. February is $187.60, and it's trading up 57.5 on this early session. January feeders now have turned positive at 255.95. That's up 15 after spending yesterday and a good portion of the early morning trade in lower territory. Now, the March, April, May, and August contracts have been higher. They were higher yesterday and building on the gains. The March at 255.77, that's up 57. And over to the hog market, and hogs are in the red with the exception of the December. The December up a quarter at 83.15. But February most active at 86 bucks. It's down a $0.50. Even the June contract at 101.37 is down 60, but still, again, trading above $100. So let's bring back in Chris Swift with Swift Trading. And Chris, let's start on the cattle side of this and cash cattle. Any expectations for this week?
Probably steady, if not maybe a little bit better. What we're learning right now is that high prices can be the cure for higher prices. And we are really finding out who wants to continue to be in the cattle business with these higher prices. Unlike a lot of where have really low prices on there and people are struggling through it and they can find ways to make do, in this particular instance, every single week is higher, and it just opens up and subjects you to a tremendous amount of risk to the downside. Not to say that it will happen, but we all know that it is a market and there are multiple factors in there besides just supply. And we consider the demand aspect of it, and we know that the consumer has been very resilient. It has been utterly shocking to me that they can continue to pay these prices where we're still seeing $313, $314 for the boxes out there, and seemingly no direction coming down. When they dip down just a little bit, somebody bids them right back up again. So the industry is ripe right now for some kind of vertical integration change in the market, and that's what it's doing. And it's almost polar opposite of what happened in the hogs, 1999 and 2000, where they drove them down to 10 cents a hundredweight, and they consolidated the industry. Here, I think we're going to do the same thing, except we're going to take a lot of people out to the upside instead of to the downside. And
I haven't done any of this, but the industry itself has just improved its product to a point that
phenomenal.
That demand is probably even going to be there with the higher prices.
It very well could be, and a lot of it will hinge on what the new presidency comes in. Right now, we're still, unfortunately, just throwing money out left and right. We can't get this guy out of office quick enough before he runs the bank down. But if we get Trump in here and he does begin to put in action some of the aspects of lowering inflation, it could impact a lot of things.
Well, that's a perfect tie-in to what I teased earlier. NFIB, Small Business Optimism Index, up 8 points in November. This out this morning at 101.7. So after 34 months below this 50-year average of 98 points, it moves above that. Optimism for small business is growing.
Good. That is good to hear. And nice tease, by the way. You kept us waiting for that one. Always great to see you,
Absolutely,
Chris.
Suzanne.
Chris, Tony, thank you.